Hey guys, welcome back to Avoiding Broke. It's me, Jamain here. Hope you all had a great weekend. Look, I'm just coming through with a little bit of late night alpha. Just some thoughts really on where we are with this whole cost of living crisis that we see hitting people globally. It's kind of crazy. You know, you're just finding the basic cost of basic living in the Western world is now far outstripping everything like wage growth. We're seeing rampant inflation. We're just seeing insane strains being put on people. And you know, look, the irony is a lot of what we're picking up is very much still felt in the developing world, and it has been for a while. You know, there have been cost of living problems that you'd that you'd obviously associate with any society that's facing poverty. But we're finally catching up with it. That's the kind of thing. And when you start seeing these problems hit through in what you typically consider to be quite developed economies, then people really step up and take notice. You know, the way we're kind of playing it, and I've been talking to Leanne quite a bit about this, and we're really starting to lean on more of our network who are quite sensible players when it comes to knowing how to work themselves through a crisis. Is we're really almost going back to what we were doing at the beginning of COVID. I mean, so if you kind of take your minds back this couple of years, at the beginning of COVID, it was a real survival mode type feel, where anybody who was kind of seeing the woods through the trees and saw that we could be facing some bigger, harsher lockdowns, we could be facing big economic shocks, were really starting to live a far more basic type of life. You know, really trying to move away from some of the rampant consumerism that affects all of us and really trying to dial things back in. I often give some really simple examples, you know, things like where you choose to dine out, making sure you reduce all discretionary spend, making sure you have got pretty tight fixed budgets as much as possible, making sure that you are really smartly thinking about what your income looks like, opportunities to increase said income, opportunities to massively reduce expense, and then you're making really clever little trades between whether or not you save versus whether or not you pay off debt. And that often is quite a funny one. A lot of people, you know, struggle to really process. And I think that kind of problem is going to be shown and felt a lot more as we go through to the next few months. You know, just to give some thoughts on where I think we could be heading. If you just look at basic living, basic cost of living, and let's just think about it in terms of the provision. Let's firstly start with the provision of food. So I think in terms of provision of food, you're going to see your normal basket of goods, whatever you'd normally have on like your weekly shop at Albertsons, Tesco, wherever it may be, that is going to go up. Every price is likely to increase, and the quantities of what you're going to be buying is likely to decrease. So if you just think about it, the price goes like this, the quantity goes like that, and that gap in the middle, that represents how much you are losing out on. And so I think we're going to see that across the board on everything in terms of food. Now, when you think about water is a very funny one because for many of us, we have water provided by utility companies. We pay annual or monthly subscriptions. It depends how you pay, right? You pay a subscription per year. Costs are typically decided per year, and how you pay is up to you. Cost of utilities is going to go up, no doubt. We've felt it already. We've seen it hit the energy sector. So we're going to see it hit water almost certainly. So just pay attention again. Not much you can do about it, right? Because these are absolute necessities. You know, on your food shop, there are things you can do. Because you can shop in cheaper places, you can buy different things, you know, you can eat out less. So you can do an awful lot to make sure the food angle is receiving some care. On water, I don't think there's much that you can really do at all. When you then think about other utilities, you've got gas, electric, we've already seen and are absorbing mass price increases in all utilities. So now is the time to be a little bit more frugal. You know, in many respects, we're lucky because we're going into this biggest cost of living crisis at a point when summer is hitting for a lot of different countries. So that means you don't need to use heating really. You definitely don't need as much hot water, and you can start to be a little bit more economical. Smart thing is that if you're economical enough over time with consistency, you're going to start saving, right? So that's got to be the play. It's got to be longer term vision for everybody. What do we need to do over time? And we need to be patient to see the results kind of manifest. When you then think, so you've got your food, you've got water, you've got utilities. When you just think about things like housing and shelter, warmth, pressure again. Rental markets for households are terrible right now. All-time high rents in many developed economies. So we shouldn't really expect a huge amount in terms of leeway and help for renters. If you're a purchaser, be it an investor or an owner-occupier, pretty bad as well, right? Inflation is killing the house price market right now, and it's really pricing out many, many people. Arguably, one of the biggest problems that we see with house price inflation is that house price inflation can move like this. It just goes up. Now, if you've got property, you can ride the wave of the inflation. But if you have none, all you're often relying upon is your wage. And wages are incredibly flat right now. So the gap, if you've got house prices going like this and you've got wages going like that, the gap becomes huge over time. That's the reality. And a lot of people aren't quite seeing that because there are far fewer people who can afford a property as a multiple of their salary than there were in the past few years. And that's all because wages are flat and house prices are rocketing. So pay attention, because if you're, depending on what you want to do, be it owner-occupier, renter, investor, it doesn't really matter. You can't trick the housing market just yet. People can have different views about where we are in the housing cycle, but you can't trick it. So you kind of have to ride this wave out until the market may correct itself. And even then, that's a big may, because property, where it's an investment type that is an alternative to the stock market, is now being looked at by many as more favourable, because stock markets have been in pretty bad shape and have been incredibly unpredictable this past 2 years. So just want to think about massively. When we then kind of take ourselves away from provision of basic needs and we just start to think about kind of lifestyle, living, what that really means, well, then that changes again. Because in terms of lifestyle and living, you're going to see that the things that we used to take for granted, that we used to enjoy, where we used to think, oh, you know what, we can afford this, so let's just do it. That stuff is going to start giving you a bit more of a sting. So if you look, for example, at air travel prices, generally speaking, have been relatively flat, but taxes have increased significantly, including on reward travel. What are you seeing? If you're staying in a hotel, you're seeing hotels revising their loyalty schemes, so you're now getting fewer benefits. You're getting fewer inclusive perks. We are seeing, the car market has been a joke for a little while. Used cars have been spiraling in cost, and even the new car market, it's got its own problems, right? Supply is quite low because of manufacturing challenges, which means that if you've got low supply but fairly high demand, that drives price up. That's how the economics works. So it's a funny time if you're looking at buying cars. If you look at shopping, just shopping for general items, clothing, discretionary electrical goods, all that kind of stuff that we'd always consume, again, prices are going up. You can't really do much to shift it. We've got supply chain problems. We've got increased manufacturing costs hitting companies globally. Companies' margins are under pressure, and so they're using more strategies to try to claw back more money. Some companies were actually undercharging, arguably, for their services for quite a while. They've then decided to try to, I'm now thinking of Netflix, incidentally, they've then decided to try to correct, to actually give a price which is more indicative of the market value, but they're getting shafted for it. So if you think, right, Netflix have just, in England, they've announced they're increasing their price, I think, to £16 per month for the top package. Now, if you actually think about Netflix compared to, say, Sky or Virgin Media, a big telecoms provider who give you cable, Netflix is much better. But we'd probably pay £100 or $100 for our internet and cable or satellite provider, but we don't want to pay £15 or $20 for Netflix. And if you think about it, you watch Netflix a heck of a lot more. So it doesn't really make any sense. It shows you that Netflix was arguably cheap compared to other services in the market. But when they put their prices up, a lot of people have just said, look, I'm not having that, I'm going. So we're finding really strange economics impacting these normal, everyday things that we consume as part of daily living. And what's almost certainly going to happen is if these companies continue the way they are, they simply can't afford not to push through price increases. That's the reality. And so it's going to be really fascinating, because we could see companies that have got big levels of interest and big adoption. They could be doing some crazy things in terms of business model. I think they'll innovate a lot, but I think they're going to make us pay for it. And at a time when cost of living crisis is hitting people, we may not want to pay. Last thing that I'm going to leave you with, guys, is what we think about when it comes to saving. So I think the whole saving landscape has become quite interesting. Interest rates are going up in different economies, and so that should be getting passed through to savers in the interest rate they're being rewarded with. You know, you're seeing people like Martin Lewis, who's the money saving expert in the UK, basically say, look, if you're not getting a good interest rate on your savings, your bank's having you over, so you need to leave. You know, that's an interesting line to take. But the reality is where we've been so depressed as an economy for so long, a little bit of interest on savings is something that a lot of people are going to value massively. So I get where Martin's coming from. It's a somewhat extreme line. However, it makes a lot of sense, particularly when people need the money. So, you know, you've got to pay attention to that one, and obviously make a move that fits you and suits what you need to do. But look, guys, I think the real story on this late night alpha is really there's going to be a lot of movement happening. I think we're going to be massively pushed as a society. We're going to feel net poorer, and we need to start probably reacting a little bit more like we did at the beginning of COVID. We need to go back into a little bit more of a survival mode. We need to toughen up a little bit, get the budgets in check. We need to get our discipline back in place, because we probably all got a little bit lazy after when COVID seemed to start be passing. We need to get more of that back in check. And I think just tighten up, get our discipline again, make sure we've got a surplus of money at the end of the month, and we need to be moving that money into places that make sense. And really, I'm going to be advocating keeping it in the pocket, keeping it there for that emergency, because you don't know what situation you're going to find. And whereas it's very tempting to do things like pay down debt aggressively and these kind of things, I probably wouldn't be, frankly, right now. Because at the end of the day, you know, like there are many different things that you can do to negotiate your payments on debt, but it's very difficult to actually negotiate more money in your pocket. So I'm very much of the camp to say, let's try to make sure we've got more money in the pocket, more to back us up in case anything crazy happens, and then we keep reassessing as we go along. All right, guys, that's it for me. Late thoughts on the late night alpha. Just wanted to give you some views on the economy, sensible things I think we could all be doing, and we'll be back with you soon. We're on holiday. If you're wondering why we weren't with you last week or the week before, we took a much needed family holiday, first time in 2 and a bit years. Really had a great time. So guys, delighted to be back with you now, and obviously speak to you soon. All right, cheers. Bye.